Welcome back. This is the third lesson, and this is where it gets really exciting because we're going to show you how you can systematically identify the sweet spot. To recap from the last lesson, we want a trade methodology that gets the odds in your favor, helps you to time the position to be right away, and one that ensures low risk from the very start of the trade. We said that the best methodology for achieving these three goals is to buy or sell with the trend on a pullback. Now you'll see how the signals can handle the job, and we'll show you the details of how the signals that we offer can do a lot of the heavy lifting for you. This lesson will cover about 80% of what we pay attention to day to day. Following this lesson, you'll have most of what you need to actually trade with the signals. So let's get started. Here's a sample chart, and here it is with the signals applied. The signals allow us to pay attention to just three things: blue for uptrend, red for downtrend, and it shows us the dots which define the market's key support and resistance. So for the first part where we're looking for the entry, let's take a look at a diagram to visualize how we can buy on a pullback. So looking at the diagram, where would you choose to buy? Point A, B, or C? Here it may seem obvious, point A is not the correct place to buy because prices start down first. We might say this entry is too early, and we can tell from the diagram that there's actually a lower price to buy at, which is point B. In fact, point B is the lowest price of the 3 points, and it starts off in the right direction right away. So it seems like it meets our criteria, but point B is also not correct because it's only after prices start higher that we can know that point B was the lowest price. See, you wouldn't intentionally buy at point A, but by trying to buy at point B, you might actually be buying at point A. If prices haven't started higher yet, it's just a guess that it's going to be the lowest price. Finally, we have point C, which is the correct place to buy. Initially, it may not seem like the correct choice because it's the highest price of the 3 points, but this is the textbook answer because first, the low is already discovered, so we know it's not a guess. It's still near the low, so the price is good, and it's likely to start off in the right direction. We also have a solid means to set a stop to protect the position, which is necessary when we're day trading futures, and if the trend resumes, then it gives us a great shot at a big winner. Okay, so let's take a look at how this plays out in an actual trade setup. Here we have a chart for NQ. It's the product that the model signal performance is based on. And this is an example of an uptrend, so you can see the bars are painted blue or green. And we have small blue dots below the price, which show the market's key support. As you watch the chart form, think about where we are in the diagram. Is it point A, B, or C? And where would you like to buy? Okay, now the prices are reaching the support dots. Is this a good time to buy yet? Remember, we're looking for point C. That means we're waiting for strength off of the support dots. Okay, we're starting to see some buying here. Prices are holding. And as prices start higher here, we'll pull the trigger for a buy entry. It's close to the dots, so we'd have low risk. And as the prices start to take out the highs, you'd be well positioned to hold through a big move. Here's the diagram again for your reference. And here are the points A, B, and C for this example. Okay, so that was a textbook example of the sweet spot trade setup. We're going to have 3 general archetypes around the sweet spot setup. Now let's take a look at another example with the slight deviation. Here again we have an uptrend, so we're looking to buy on a pullback to the support dots. And it's the same thing as before, we're looking for point C. Based on the description of point C, at this point you should still be observing and waiting. And now as prices are starting higher, we may attempt to buy. This example shows how that extra bit of patience can actually make a difference as prices are still finding the low. For our final example, we're going to take a look at a developing short opportunity. When prices are in a downtrend, we can sell short to profit from the move lower. The trade setup's the same, just upside down. So the pullback we're looking for is for prices to trade up toward the red resistance dots, test, and then trade lower. We'd still be looking for point C, which would be after the high is discovered. At this point, prices have pulled back to the dots, and we'd be waiting and observing. You'd have your finger on the button ready to pull the trigger if we see the bar turn red. And there we go, there's the sweet spot. And here are the points A, B, and C as we described them for the downtrend. Now let's talk about how to manage this position. So far we've just talked about where to buy or sell, but without a stop, that long or short position is like writing a blank check to the market. The sweet spot is based on having low risk, and the only way to ensure that the risk is limited is to have a stop order with the position. When you're getting ready to pull the trigger on a trade, you need to already know where the stop is going to go. Our rule for setting the stop is to set it at the previous level of the support or resistance dots. Here's the chart again, and here's where the sweet spot was. The price had tested the dots at 76.06, and we have a textbook sweet spot trade setup. At that time, the previous level of dots are at 76.11, so we can quantify the risk even before we trade. If we're able to sell short at around 76.04, it would be about 7 points away from the stop, or about $140 per contract. The nuance in this business of setting the stop is that the stop wants to be close to the entry for low risk, but also has to be meaningful to the market. This stop at 76.11 is as close as it can be. Any closer and you risk getting stopped out on market noise. If you get stopped out before the move, it doesn't matter how good your entry point is. Following the rule for setting stops, we should have a stop that's significant to the market, and that should keep us in the trade if we bought or sold at the right time. Here it's our exclusive algorithm that's doing the heavy lifting, as the dots are able to reveal the key testing points and get us in as close as possible to the sweet spot. Once prices start moving in the right direction, you'll have a chance to move the stop in and manage the risk out of the trade and begin to secure profit. It's the dots that take care of this task as well. We'll continue using the previous level of the dots as our stop, and we can stay with the trend until the position is either stopped out or the color changes to blue to signal the end of the trend. That's what allows you to capture the big winners. Here you can see the trade would come off as the price crosses the previous level of the dots. It's getting stopped out at 75.26. That's an 80-point gain, or $1,600 per contract. Remember, this is a trade setup that only risked $140 per contract at the start of the trade, so that's some seriously good risk and reward. So let's recap. AbleTrend reveals the sweet spots that start with low risk and have the potential for big returns. We can anticipate when a sweet spot is coming as prices pull back to the dots. We want to ensure that there's limited risk by using a stop, and our rule is to use the previous level of the dots for the stop. You stay in the position until stopped out or a color change signals the end of the trend. If you can recognize the sweet spot, you've got an edge that you can trade with. Now you should be ready to get in the driver's seat and start learning hands-on. We encourage everyone to practice before using the signals to trade. There's a great tool that you can use to play back market data and simulate real trading. With our risk-free trial offer, you can download AbleTrend and test drive it for yourself. Be sure to keep it low pressure as you get started. To have the best chance of success, you need to be able to experience the winners and the losers without the pressure of making or losing money. The best part about this offer is that it includes one-on-one coaching. For a lot of people, this is the most valuable part of the offer because we have years of experience that we can share, and we love helping people get the most out of AbleTrend. You can sign up for a 30-day trial offer by going to www.wintick.com and clicking on 30-day trial, or click on the link in the description below. Use the promo code SweetSpot to save 50% off at checkout. Next up in this course, we're going to go through the 6 archetypes for trade setups, and we'll show you how you can use our guidance chart configuration to go further and filter out noise and capture some of the big winners that you may miss out on otherwise.